All right. Thank you, everyone, for joining. It is 2:30 Central Standard Time, so I'm going to go ahead and close the poll. We did want to share the answers that we received with you all. So it looks like a majority of you picked that first option at the very least, due to the current situation that we're dealing with as an investor, operator, or advisor. Are you dealing with any of the following? So shortfalls in revenue or requests for rent accommodation. So that's really great to hear. Honestly, not from necessarily, the point of view and the future outlook, but because we're definitely going to go through and show you different ways that you can manage that within your ARGUS enterprise models today. So with that being said, I will go ahead and hide this and we will begin our presentation today. I'm actually going to pass it off to my colleague, Rick Schwartz, to begin the presentation.
Great. Thanks, Erica. So, welcome everyone. Thank you for joining. Again, hope everyone is staying safe and also managing to keep their sanity intact, given a little bit of these unprecedented times we're going through. A couple things before we get started, quickly from a housekeeping perspective. Erica presented one poll question. We will have a couple more poll questions throughout the session, so if you can answer those quickly, and then we can move through this. The webinar should last for about 30 minutes today. May go slightly longer because we want to take the opportunity to answer some questions at the end of our session. But don't feel compelled to hold your questions until the very end. We will be receiving questions, so you should be able to submit those in your panel. We have some folks looking at that who will be responding throughout the webinar, but we will also respond to some of these at the very end of the session today. The session will be recorded and will be available as a follow-up, so you will be able to access the information once again after today's session. Okay. So as a result of, and I think everyone's experiencing many of the same things based on the survey and the feedback we just went through. But what we want to cover today is we'll go through some market conditions, some operational considerations after this, and then we'll start to walk through a presentation of how you can look at these things and address these to put not only a proper plan in place, because I think some of that's already started to happen, but how you can track and monitor that plan and also start to modify the plan as needed in a pretty dynamic environment. So market conditions, I think we've all seen this. We've got regulatory restrictions, closures, there are starting to become some openings, right? There's obviously been a significant impact on unemployment and the employment sector, certain sectors of the marketplace, whether it be at a tenant level or we'll call it an industry sector, hospitality, retail, office, industrial, are being impacted very differently. Obviously, some strains on liquidity, working with your tenants. Government has put in place some funding initiatives. Some of them have already come to fruition, and they've been around the fundings that are going to assist many of our tenants in this process. Transaction delays, I think we're starting to see people sit on the sidelines. There's some increased scrutiny in the underwriting process. For our fiduciaries, some additional scrutiny. They're looking for information from you, right, as an investor and advisor on their behalf. And again, with things changing pretty quickly, weekly, sometimes daily, right, how are you keeping up with this thing and modifying your plans as needed? So if you look at those market conditions, how do they translate into day-to-day life and your operational considerations? We talked a little bit about rent deferral and concession management. A lot of those, you've already reached agreements with some of your tenants or some of the people impacted most significantly by that, and you're putting that into your billing and accounting systems, right? but how's that changing? How are you looking at that? How's that changing your plan? Expenses, how are you controlling those things short term and long term, and the impact on some of these things like insurance premiums and so forth. We don't know what that'll be. Okay. As it relates to unemployment, depends who you believe, right? But space requirements, short term, we're starting to see leases that are up for renewal. People are starting to very short term renewals. People are still trying to make up their mind about what to do. So how are you applying assumptions for short term renewals and then getting back to general market conditions? Then what are we looking at 12 months out where people may start to look at some additional space, or if you believe other people, start to downsize in some space depending on the type of tenant they are and whether they can truly work remotely or incorporate that into some of their business process. Sector performance, again, you have people who are thriving, people who are getting by, and people who are really being impacted. So how do you segregate your portfolio and your tenants based on these type of criteria and apply different assumptions to them? Monitoring liquidity and cash flow and loan covenants and how you maintain compliance with those. If you're looking to restructure, what do you need to do to restructure? We talked a little bit about the funding initiatives and potentially getting some money back and tenants being in a better financial position. Transaction delays and scrutiny on the underwriting process, what that means in terms of not only valuations, but cash flow. Cash flow is king right now, particularly short term. From an investment perspective, we're actually seeing some things on our advisory business where there's been a significant ramp up from quarterly or annual valuations, sometimes even monthly valuations, or some form of that because their investor base is demanding that kind of transparency. And once again, with the fluid environment, you need good access to good information. You need to be able to run through different scenarios to put together a plan and truthfully to pivot or adapt very quickly to that plan as needed. This is what we're living. So as it relates to that, and I'll start the transition over to Erica, but this is what we plan to go through today, and we'll have some dialogue and some questions around this when we're complete. We'll start at the property level, and we'll start to look at how you are managing some of these requests for concessions, looking at liquidity and your covenants and valuations. But this is beyond the property level. This is also then taking it up and applying those same type of analytics and assumptions across an entire portfolio. Looking at, depending on those different exposures and the sector performance that we talked about, looking at the impact on various components of the portfolio and making those changes globally. And then we'll wrap it up with, all right, how do you get access to the tools needed? Some of you may have ARGUS. We're going to show you some other things that you may not have access to. For example, the sensitivity components in the software. And then other services that may be able to help, whether it be our client enablement team or training and support services to help you navigate through these so-called headwinds. Okay. So that being said, Erica, I'll transition it to you. Why don't you walk through the presentation and we'll go from there.
Absolutely. So while I'm getting set up with the presentation, we had one additional full question that we wanted to open up to everyone. The question is, over what period of time do you expect to be needing to react to rapidly changing market? I'm sure a lot of you are already reacting to this, over the past several weeks and months. But it would be interesting to see, how much more you're having to do than expected. All right, so it looks like quite a few have voted, so we definitely appreciate that. Just like the last poll, I'm going to go ahead and share the results. And much like what I've just said, we, we expect that the current environment will be evolving for the next year or so. So hopefully today we'll be able to walk you through some of the ways you can, change the elements within your models within ARGUS Enterprise, stress test some items, make updates across the board in order to, anticipate these changes that are needing to be happening. So as Rick outlined, a lot of the operational considerations that you're not only thinking of, but actually needing to adjust within your models to ensure you have enough cash. As he said, cash is king to continue your operations and ultimately determine the impact on your returns in the long run. So what I want to do is take you through an individual model, as he mentioned, and then kind of zoom out from there and look at how to stress test things at an overall consolidated asset or portfolio perspective to see the impact on your models. So within here, most of you may not be aware, but within ARGUS Enterprise, it actually allows our clients to model your debt in a very robust way at the asset level. This can actually be found under the investment tab, and then either in debt financing or other debt. The debt financing section is actually going to allow you to calculate out your debt. Often at times, clients are calculating, or they could be calculating out debt outside of the system. So the other debt option is just to allow you to have a line item within your cash flow report, so it shows you cash flow before and after debt. But within the debt financing, you can have as many debt notes as you choose to have. These debt notes can be amortizing or interest only, or a combination of both. You may have a construction loan and it may be interest only, and you want to base it on particular line items, so that's definitely a possibility. From here, it's really how you're going to get the overall value of that debt note. Right? Are you going to base it on just simply putting in an amount, a loan to value, takeout, which might be the amount of a different loan, maybe if you're refinancing, for example, and then the percentage of other might be just a percentage of another line item. So maybe a percentage of the purchase price, or in my prior example, a percentage of maybe some construction costs or capital expenditures. Now, as we really start to move left to right, you're going to have your other, assumptions that you would normally enter in within your debt model. So things like your interest rates. There are flexibilities or options within ARGUS Enterprise to actually model out global interest rates. So these can be used across the board in multiple assets, and effectively you only have to update them in one section and then apply them within the model. In this case, we have floors and ceilings to calculate out what those interest rates would be. And then anytime you have an ellipses here, this is just going to be your detailed screen and allow you to detail out that particular value. Now, as we begin to move more to the right-hand side, you have other elements like date. So my start date, my loan term, we have our amortization term and number of months. And then we have any additional principal and additional loan costs, either as a percentage or as an amount that we would want to enter in. And then last but not least, we have our covenants that we may want to look into and actually model out. Now, for each covenant type, you do have hard and soft breaches that can occur. You can once again vary these if you choose to do so, utilizing the ellipses. And there can be penalties associated with those particular breaches. So in this case, if I do have a hard breach, I have a cash sweep of 25% over a 6-month period. This will not only display on your individual debt reports, but it'll also be displaying whenever you look at your cash flow report towards the bottom section, where you have your cash flow before debt, your debt assumptions, and then cash flow after debt and available for distribution. Now, these breaches don't only have to be dependent upon a debt service coverage ratio. You'll notice in the drop-down menu, we have quite a few additional options within here. Now, it is important to model out debt within ARGUS Enterprise because you do need to ensure that you have enough cash to pay your lenders, especially if you're given rent relief to your tenants or you need to make, other adjustments within your model. So this is ultimately, by modeling this, going to allow us to create kind of that base case, if you will. So now that this has been modeled, I quickly want to flip into some of the reports that are available to you out of the box. These debt reports happen to be available at the individual asset level, but you do have some debt summary reports at the consolidated level. And then you also have the flexibility to see if any breaches have occurred once you do the sensitivity analysis. So we'll get into that once we look at the sensitivity matrix. This report right here is just seeing if we do have any breaches that are occurring. So in this case, we have some soft breaches indicated by that yellow-orange color. If there were any hard breaches, it would obviously be based on the red coloring in the top right-hand corner. And then we can expand out and see which periods these breaches are actually occurring. If you prefer more of a graphical representation of this, you can certainly see this on our covenant breach graph. And then in addition to that, in the top right-hand corner, we can always switch between our different print intervals if we wish to do so to see that at various points in time. Your loan amortization is just giving that, detailed loan amortization report, and then the loan interest is showing us what the interest values would be for each and every period. This is particularly useful if you are using one of those interest categories that I mentioned before. You can see what the exact rate that is being utilized. Now, once your debt has been modeled within ARGUS Enterprise, we can start making those additional adjustments to see how it affects our debt and then, of course, our cash flow. Very quickly before I move into modeling those incentives or concessions out, I did once again want to show you the cash flow report, which I'm sure a lot of you are very much aware of this. Down across the very bottom, once again, we're able to see our cash flow before debt, right? We're also able to see the interest and principal payments for that debt note, and then the cash flow after debt service. So we're looking fairly okay, except for kind of that last year within here, to be able to, cover our debt payments and so on and so forth. So now that this is done, like I said, let's take a look at how our tenants are currently asking for, rent relief in the form of concessions and where those can actually be modeled within ARGUS Enterprise. Within ARGUS Enterprise, luckily we can model these concessions in a variety of different ways. There are options within the miscellaneous items section to model out free-form different incentives. So these can really be anything that you choose for them to be. In this case, for this medical office, I might have a specific, rent concession, in this case for above market TIs. I might have something else for this tenant, just another blank incentive. So these are those free-form fields where you can add in as many line items as you want to. You'll also notice that on the far right-hand side, you do have the option to recover these incentives if you choose to do so. Now, in certain instances, you may have the same category that needs to be applied across multiple tenants, and you don't want to manually do it one by one by one in the rent roll as I'm showing you here. So within the market tab, you have the flexibility to create different categories that can not only be applied to the tenant rent roll, but also can be applied to the market leasing assumptions as well. So let's look in a particular example at abating 50% of a tenant's rent for 4 months. Within this category, I'm going to specify certain periods. So I might want to look at, May, June, July, and August and abating those amounts. You'll also notice on the far right-hand side, we can actually indicate which elements we would want to include. So it doesn't necessarily have to be just our base rent. It could be our recoveries. It could be some of the miscellaneous rent. Maybe if we've given signage or vending machines. So very quickly, I can add a line item. I can name it as I wish. So 6% statement. And then you have your how input field. So this is going to be how it's being calculated. From there, because I want to specify certain periods and a certain amount to be abated as of that period, I'm going to detail out that section. And within here, you have two separate options. You have an option to enter in a month number, or which would be relative to the lease start date, or you have the option to actually enter in a date. So since I want this to be the same across the board for every single tenant in the same exact month, I'm going to go ahead and enter in that date. So in this case, 5/2020, where I'm going to abate half a month. Just fill this out here. And you'll notice you can put in a variety of different variables if you want to, or change that value. So it doesn't have to be, half a month. It could be a quarter of a month if you chose to do so. Now, after this has been done, right, this category can then be applied to the various different tenants. There is copy and paste functionality within ARGUS Enterprise, so you can do this from one asset to another. You can do it across the board in the tenant rent roll to really save you time in modeling and making these updates. Within the tenant rent roll, there's another element that I'd like to highlight that some of you may not be aware of that's incredibly useful for not only doing things like the mass updates, which I'm about to show you, but also for reporting purposes. Within ARGUS Enterprise, you can actually create what we refer to as tenant classifications. Now, these classifications are system-wide and they're really free-form. So you would set what the classification would be in the value. They're much like property classifications if you've used them before. But by displaying them on the rent roll, as we see on the far right-hand side, we can start to slice and dice the way that we're looking at this data. So for example, if I wanted to only apply this to tenants with a high risk rating, I can filter down by high. I can move back over to where my free rent is, and I can apply that abatement, right? So let's go ahead and copy that, and then we'll go ahead and paste it down. So just a quick Control-C, Control-V. Now, for some of these tenants, you will see there's this yield or warning message. That's just simply because those tenants are not in the space as of when I'm applying these abatements for, so we wouldn't necessarily see them on our particular report. But once this has been applied, I can quickly flip back to an audit report, for example, specifically our lease audit report. And then I can move down to the free rent section and I can see the free rent that's being given for those particular tenants as of these periods. In addition to that, because I have been giving this free rent, I can then see if it affects any of my covenant breaches. So in this case, unfortunately, hard breaches have occurred based on those changes that I have made, and I might not have enough cash to actually, cover my debt. Even more so, flipping back to my cash flow report, where we just had our interest and principal payments before, we now have those cash sweeps or those penalties associated with covering that off. If I choose to do so, I can always flip this out and view this on a monthly basis instead, and being able to see how, if I do have cash after debt service month over month as I move forward. So that's going to be the basis for some of the elements that you would want to do at the individual asset level. In addition to making these changes at the individual asset level, we may then want to do even broader analysis across our entire portfolio. So for example, if you had speculative spaces in your different properties, what if they don't actually lease up in the next 3 months as expected, and that leasing is actually deferred by 3, 6, 9 months, whatever it may be? What if the market rents drop drastically or incentives are provided to maintain the occupancy? Cap rates are changing, renewal probability is changing, or even a positive aspect to this. What if our expenses decrease by a certain amount because we don't have to have, janitorial folks within our buildings and actually cleaning things because there's not as many people in our buildings on an ongoing basis. So any of these changes that I've just mentioned can actually be done across an entire portfolio or a subset of the portfolio. So once again, maybe utilizing some of those portfolio classifications to slice and dice your data and only apply these changes across certain assets and not the entire portfolio. So within ARGUS Enterprise, you can actually conduct sensitivity analysis in a variety of different ways. It's ultimately about the output that you want to see whenever you're modeling. So do you want to simply look at your key performance indicators and look at kind of a matrix and see positive and negative impacts? Or do you want to get a little bit more granular in your modeling and look at things like a cash flow comparison or a value comparison report? So one of the ways we can look at this is through the batch update functionality. Now we can make changes permanently to the scenario that we're looking at. So that would be update current scenario. Or instead, if we just wanted to copy the assets and make changes to the copy, we could do that as well. So what I've done here is I've taken 4 assets within my portfolio. And remember, this can be as many assets as you choose to do so. And I've copied them into a pandemic test scenario, if you will. So this is going to be a little bit different than my base case. Down across the bottom, I have all of the categories of variables that I can begin to manipulate. So things like, my inflation rate, my market leasing assumptions, and so on. In each one of these sections, you can make global changes across the top, and then you can make individual asset changes down below. So for example, if I wanted to increment my market inflation rate by 50 basis points between 2021 and 2032, I can go ahead and do that and quickly apply that. for this property, you'll see it's moved from 3.5% up to 4%. I can also just come in and simply type in values if I wanted to. So for example, if in this property I wanted this to be 3.75%, I can do that and apply that specifically to that property. Our market leasing, once again, is going to be all of our market leasing profiles. So I may decrease the base rents, I may increase the downtime between tenants, and I may decrease or replace the renewal probability here. And go ahead and hit apply, and then we can see that renewal probability on the far right-hand side is at kind of that 50% rate. Leasing would be the instance where I may want to push out those spec spaces. So in this case, with my speculative tenants, right, I may want to increment this by 6 months, right, and apply that and push out that start date. Valuation is going to be cap rates, discount rates, date of sale, default resale method, your capital expenditures, the amount or timing of them, and last but not least, your vacancy and credit loss. So the option from here is going to be a little bit of that more granular detail where you may want to look at something like a cash flow comparison report. In this case, I am doing my pandemic test versus my base case within both of my operating portfolios here. And I can see those changes. In addition to this, I can expand out the details and see the values coming from each property I've chosen to sensitize. Now, if you don't want to do those individual changes and, like I said, make a more blanketed approach, you can always generate a sensitivity matrix that looks a little bit something like this. If I back up one step here, effectively we have a lot of the same variables that we may want to change or assumptions we may want to change within our model. We even have options across the very bottom section to make changes to our debt assumptions if we chose to do so. And then effectively you would indicate which axis you would want this variable to be on, and then your number of steps that are going to be generated in that matrix. It is going to take it's going to take all the properties within that particular scenario and stress test it. And in this case, I'm looking at unlevered IRR and present value. However, I do have the options to pick and choose in the top left-hand corner which two KPIs I would like to display on screen. Now, of course, we always want to get, much more granular detail. So by clicking within a cell within our matrix, we can then drive in and look at the detailed results. And we can see how it's affecting each and every property we've chosen to sensitize. And then, of course, our debt KPIs across the very right-hand side. Because we do have some of those covenant breaches modeled within our models, we can also see if a breach happens to occur based on kind of the changes that we've made based on that stress test. More importantly, this is not just only a one-off what if, it also allows us to apply it to the scenario, so making that permanent change, or to go in and create a new scenario. So if I wanted this to be, pandemic test worst case versus just a bad case, I can go ahead and name it accordingly. Now, the last thing I did want to cover off within the sensitivity analysis piece is going to be the sensitivity assumption set. So once again, you may want to create a standard in which the way everyone in your organization is running these analyses. So you're comparing apples to apples when you view, the matrices as well as the various different comparison reports. So within the backstage, you can create these sensitivity assumption sets. You can share them with other individuals within your organization if you choose to do so. And just as an example of one, it's going to look very much like what I showed you before. However, in addition to not only stating this within the ARGUS Enterprise solution, you're also able to add filters to this. So you may say, okay, globally, let's do X, Y, Z, and then if it's a central Class A office, do something a little bit different. So by utilizing your property classifications, you can start applying different assumptions to different property types, or just different, properties based on their region, whatever it may be. These filters, you'll notice up at the top, if I just edit the current one I have, give you a variety of different options to, include or exclude certain elements within here. And these can be used just as I showed you before with the sensitivity matrix and seeing those results or making updates. So the adjustments that I've made within Argus Enterprise have been easy, quick, and more importantly, they show me the impact on my key performance indicators and my cash flow and other elements based on, changes in rent and so on and so forth. Some of you may then wish to dive a little bit deeper and make additional assumptions or adjustments across your portfolio for your contractual tenants. You may have noticed when I was in my batch update, I was only making changes to my speculative leases within here. Because contractual leases are typically kind of set in stone, if you will, another way to make mass updates outside of Argus Enterprise is through a tool called Excel for ADW or Excel for the Argus Data Warehouse. This is actually going to be an add-in within Excel. And with it, it allows you to connect directly into your database and then create input sheets or result sheets. So really here, the input sheets are going to allow you to make those mass updates to more contractual elements about your property or factual elements about your property, if you will, across your entire portfolio. So you can extract this data, you can manipulate it, and then you can push it back in. So I've pulled a few different tabs across the bottom that are just simply showing me other elements that I may want to change. I did show you how to create a free rent category. So for example, if you wanted to create that category once and you wanted to apply it across multiple properties, you could certainly extract that data and then copy and paste it using Excel for ADW, and then send that data back into AE. As this might be used for more complex adjustments to your models, and you don't have time for this, you're not sure how to do it, you may want to engage our highly experienced client enablement team to assist you in making these changes. So there's definitely a resource available to you. Rick mentioned that our services team could help with this, and so they'll utilize their experience and their knowledge of not only the industry but also Argus Enterprise to make these changes. So with that being said, we are actually done with the demonstration portion of the webinar for today. Obviously, a lot of you might have some questions and have been sending in questions that some of my colleagues have been answering. So we will take a moment to actually look at some of these questions live, and then if necessary, I'll show you things within the solution that can actually help you model the answers to your questions. And while we're doing this, if you don't mind answering the next poll question, if you have capacity for the analysis you need to do.
So while we're doing this, Erica, I think there was a couple questions out there while people were responding to this. One person asked, while we can put in the free rent, which they saw, is there a way that you can show how if they're deferring that and paying it back at a later point in time, if you've got a model or a way to do that, show them how that would work? Okay. There's a few other questions as well, but okay.
Absolutely, right. So I'll go ahead and close out the poll to answer that question very quickly. So you might have noticed this when I was in my individual model, that in the tenant rent roll, you not only had a section for your miscellaneous incentives, but you also had an option for your miscellaneous rent. So just like the incentives, the rent is specific to that particular tenant, and it's another category that you can create. So effectively in here, if I wanted to, I could open that up, create a new window across the very bottom section, and then I can start to determine what that value would be and how I would pay that back. So for example, I may take the amount that was abated for those 4 months and amortize it over the next 12 months. And with that, I can detail out these amounts and specify what it would be for each and every period. So for example, I might start, July through the next June and put in what those amounts would be. So that's one way to do it if you do want to see it tenant by tenant. The other way to do it is, you could always base it off of a percentage of the rent that the tenant's paying. This is probably not as precise, but it is an option. And then, of course, you always have your miscellaneous revenue section within Argus Enterprise. So if you just wanted to put in a blanket amount for, your property rather than doing it tenant by tenant, that's an option as well.
Great. Okay, so that's helpful. So it's a matter of precision, but there's an easy way to do it where you would just put in a factor on future rent, or you can be much more precise and put in the numbers. Is there a way to, another question that came in, is there a way to kind of manipulate market growth rates for the first couple years, and some variables in the next year or two across the portfolio, particularly in MLAs, and then have it stabilize? Or is it completely an override?
No, so you can pick and choose the time frame that you would want to look at that for. So back in this kind of batch updating section, across the top, you have your market inflation rates, and you would increment it or replace it. But you also have kind of this section right here where you could specify that time frame. So it could be for 1 or 2 years and then, stabilize it from there. Whatever you put in that top section is going to apply to all of the properties down below. So it's kind of your choice of how you want to do it. If it is going to be the same, then certainly utilize that feature to make that match change across the board. But it is going to be one by one. This is still a great user interface to be able to make those changes.
And we'll do one more, and then I think there's a few more questions out there, which we'll get back to people on directly. But when you were going through the debt, there were some questions about floating interest rates and so forth. Can you set those up and set up your own curves? And one, does it have to be done manually? And then two, can you take a feed from other systems to update those?
Yeah, great question. So I had mentioned this, but I didn't actually show it. You do have options in the backstage to manage your inflation rates. Sorry, not your inflation rates, your interest rates, excuse me. And with these interest rates, these values can be copied and pasted from an additional source. So it's not necessarily a feed, but they can get into Argus Enterprise very easily. If you have these set up, they can then be used within your individual model. So if I move back to Bank Center, which we were previously looking at specifically on the debt side, I am actually utilizing one of those interest rates here. So in that drop-down menu, I can see all of the ones that are available on a global basis. Now, if you didn't want to use one of those global interest rates, you can detail out the values and you can put in what those rates might be. Your margin here is going to be in addition to that interest rate. So in this case, it's LIBOR plus 2%. And then once again, I have those floors and ceilings. You don't have to use those values if you don't choose to do so, but that's definitely something that is an option for you all. And then, of course, it shows you all Excel for ADW, so that's another way you could do a mass update of these rates across the board to multiple properties if you chose to do so. Right?
Great.
So we had a few more slides, just kind of wrapping things up for you all, how you can get help and support and so on. So I'll quickly display that here. And Rick, if you don't mind going through how we can actually help users and how they get access to some of those trials and things like that, I would greatly appreciate it.
Yep. So we'll go through this quickly in the interest of time, and then we'll have one quick question after this. So if you can all hang on for about another 15, 20 seconds and answer that, that'd be great. So very quickly, in order to do some of this stuff, obviously you need access to the software. Part of this is we really want to help. It's a pretty fluid environment. There's some things going on here. You need to adapt quickly. One of the things we're offering is, for those of you who don't have the sensitivity modular components, if you're interested, there's an opportunity to gain access to that on a 30-day trial basis. So you can utilize that, work with that through some of this planning and really get a sense of the value it can bring to you as you're doing these portfolio level assumptions. Obviously, Argus is in the cloud, so it makes it easily accessible. There's no deployment. It's very simple. It can be up and running in a matter of, truthfully, in a matter of minutes. So easily accessible, and the sensitivity component is available. Our support team is always there to answer your questions. There's online support, there's phone support. So we're there to help, and we want to help very quickly. From an education perspective, there's opportunities for remote training, obviously, where we can set up some private training sessions for you and maybe a couple other team members to go through this. They're usually about an hour to an hour and a half. Pretty quick, but it can get you going very rapidly. And I mentioned that this webinar will be recorded and it'll be posted, but we continue to have demonstrations and webinars available, and information constantly posted in our knowledge series. Some of this can be pretty complex. Some of it also requires some advanced skill sets. So if you don't have the time, or you really need to get some things done, we have a team of expert service personnel who can very rapidly do a lot of this data mining and analytics and portfolio updates, utilizing the tools like Excel for ADW. They can help you with that work and also train you and transition some of that knowledge as part of that process as they're doing the work in conjunction with your teams. And then finally, advisory services. This is kind of a sister or one of our other services that we offer here, which is independent of our software services and our software company. But the advisory services team, they do a ton of valuation management, internal appraisals, and like we said, with fiduciaries, there's a need there for enhanced transparency and sometimes more frequent valuations. So those services are available. The easiest way to do this, folks, is if you have a question about any of this, you can just contact your account manager. If you don't know who that is, you'll send us an email and they'll make sure to reach out to you.